Hello students, welcome to BYJU'S. Welcome to a session on Explained. Very recently, you must have come across the concept of an Ind AS. That is in the context of RBI postponing the applicability of Ind AS, that is Indian Accounting Standards, which were supposed to be applied to the banking sector. Though this is a very technical concept, we'll try and understand the basic of this particular concept of an Ind AS. Let's begin the discussion. In case of India, the companies are expected to prepare certain statements. That is, let's say I'm running a company, and since I'm running the company, I will prepare certain financial statements. Some of the very important financial statements are: one, the concept of a balance sheet, and the second one is a P&L account, profit and loss account. Usually in case of a balance sheet, what I will do is I will record what are the assets of my company. Just understand the basic concept here. In case of a balance sheet, I will record what are the assets of my company, and I will also record what are the liabilities of my company. What do you mean by liabilities? The money that I have borrowed or that I need to repay. So basically in the balance sheet, I will maintain the record of the assets as well as liabilities. Whereas the profit and loss account is basically an income statement. What do you mean by income statement? How much expenditure I've incurred and how much revenue I've collected. Obviously, since I'm running a company, I want to ensure that my revenue is much higher than my expenditure. But the financial transactions are recorded under the expenditure head as well as the revenue head. The maintenance of these kind of a table is nothing but income statement or P&L account. What is the importance of these particular financial statements? Let's assume from a perspective of owner of the company, if I go to a bank and I ask them to lend a certain money to me for running of the business. Obviously, the bank will say, on what basis should I lend to you? I do not know how the company is performing. In that particular situation, I will show them my balance sheet. I will show them my P&L account. And if my profit and loss account shows a picture that the company is making huge amount of profits and my assets are also very high, then the bank will have an inclination or the probability of giving loans to me will increase. So basically, from the perspective of the owner of the company, these financial statements are very important. Now, apart from the owner, it is also very important for investors to have a look at these particular statements before making a decision to invest in the market. For example, let's assume I want to invest in a particular company XYZ in the stock market. Now, the question is, on what basis should I invest? Many a times, the investors in the market will have a look at these kind of financial statements and make up their mind whether to invest or not to invest in this particular company. For example, if a company's balance sheet shows that their liability is much higher than their assets, then usually an investor will not be willing to invest in these kind of companies. Or if the P&L account basically states that for the last 4 quarters or for the last 2 years, the company has made losses, again, the inclination to invest in these kind of companies will come down. I'm just saying inclination. So basically understand this. These financial statements are very important, not only for the owner's perspective, but also from the investor's perspective. So how do you enter the transactions? How do you enter the number? Which side you enter the number? This will be decided by various guidelines or standards. For example, if I've incurred certain expenses or if I've paid excess duty to the government, where should I enter it? Under the expenditure head or the revenue head? Or if I've given a discount to a customer in the market, should I enter it under the expenditure head or revenue head? The guidelines which will dictate how do you enter the financial transactions and how do you prepare these kind of financial statements in India. These system or these standards are called as Indian Accounting Standards. Now please understand, earlier the companies in India used to follow a different type of a methodology where they were accustomed to entering this particular transaction in a particular manner. But in case of international mechanism, that is across the developed economies, they follow a system of IFRS, that is International Financial Reporting Standard. So there was a call that Indian companies also should shift to IFRS. But Indian companies basically stated that if we suddenly shift to IFRS, it will create confusion, because both the standards or both the methodologies are not same. There are huge amount of differences. This will lead to complexity in the system. This will lead to confusion. So basically, to ensure that Indian companies will gradually shift from the domestic methodology to the international methodology, Ministry of Corporate Affairs in the year 2011 basically announced that there will be a new system introduced in India which will ensure that gradually the reporting standards in India will be harmonized or will become equivalent to the international standards. This particular system which was introduced, which will keep on making gradual changes in the system in India, that is a reporting system in India, is referred to as Ind AS, Indian Accounting Standards. And the Ministry of Corporate Affairs in the year 2015 basically brought out the concept of AS rules, that is notified the AS rules, and since then Ministry of Corporate Affairs has stated that there will be a harmonization of Indian standards with the global standards in 4 phases. In the first and second phase, remember this, listed and unlisted entities will be covered, and in the third and fourth phase, banks, NBFCs and other financial institutions will be covered. So MCA in 2011 stated that we will gradually shift to the international standards, and in 2015 notified the AS rules, and in 4 phases has implemented or is implementing these particular Ind AS rules. The first and second phase has already covered the companies listed as well as unlisted. In case of a third and fourth phase, they are going to cover the banks as well as NBFCs. The NBFCs have already been brought under the Ind AS, that is Ind AS is applicable to NBFCs from the last year itself. In the last year, from April 1st, 2018, RBI was supposed to introduce applicability of Ind AS rules in the banking sector also. But since there was a requirement of amending Banking Regulation Act of 1949, which was yet to be amended to facilitate the implementation of Ind AS as well as the preparedness of the banking sector itself. Based on these 2 parameters, RBI postponed the implementation of Ind AS for a period of 1 year. In simple terms, rather than implementing from 1st April 2018, it postponed the implementation from April 1, 2019. It was supposed to be implemented from the next fiscal year. Now, very recently, RBI has again announced that since the Banking Regulation Amendment Act, the changes are yet to be made, the implementation has been postponed indefinitely. That is, until unless the necessary changes are made, the applicability of Ind AS will be put on hold for the banking sector. Now, before even RBI announced it, the banking sector was opposed to the applicability of Ind AS. For a simple reason, understand this. Whenever the Ind AS system is entered into, the way the financial transactions are entered in these particular books or the accounts of the companies, the system will change. The process will change. The methodology will change. For example, just understand this particular concept. Earlier, if a particular company gave a discount while selling a product to the consumer, that is, before the Ind AS was implemented, if a particular company gave a discount to the consumer while selling a particular product, this discount was considered as a part of marketing expenses. It would go under the expenditure head. But with introduction of Ind AS, it stated that this discount will not be part of marketing expenses, rather it will be deducted from the revenue side of the P&L account. So you can see that such changes will be introduced with introduction of Ind AS. But specifically from the banking sector, why they were opposed to the idea of an Ind AS. To understand this opposition, you must understand the concept of ECL, expected credit loss. Now, in banking sector, what is the present methodology? Let's assume bank has given loan to a customer. If the customer doesn't repay the loan to the bank will classify this as an NPA. But after a certain period of time, this particular NPA has to be written off, and to write off this particular NPA, the bank will start making provisions. I have to understand these particular basic concepts. Just to explain to you, much simplified way. If a bank has given a loan of 100 rupees to the customer, and along with the interest, the customer is supposed to pay 110 rupees to the bank, and he doesn't repay, the bank has to ensure this 110 rupees will be provided for in its balance sheet. So what it will do? Let's assume hypothetically this year it has made a profit of 500 rupees. Out of 500 rupees, it will basically strike off 110 rupees this side, that is its asset side, and 110 rupees on the liability side. This in simple terms is called as a provisioning norm. Again, this is not the exact methodology. I'm just trying to simplify it. So this is the provisioning. So can I simply say with increased the NPAs, the provisioning also has to increase? Now presently only when the NPAs increase, provisioning will increase. But under the concept of ECL, expected credit loss, it basically states that even before the account become NPA, you will have to expect certain losses from the account and start making provisions for it. I'll repeat the statement. Under the concept of ECL, expected credit loss, even before the account becomes an NPA, generally when you report your figures, you will have to assume that this account will become NPA in the future and start making provisions for this particular account. Now the banks say that if ECL is implemented, even the provisioning has to be done. And since we are already stuck up with huge amount of NPAs for which we are making provisions, the amount of a provisioning will increase with introduction of expected credit loss. As per one survey, it is stated that if ECL is introduced, that would have come into picture with application of Ind AS on the banking sector, the expected credit loss would have added to around 1.1 lakh crore worth of provisions. That is in simple terms, if a bank is suffering from certain NPAs for which it is making provisions, apart from these particular provisions, it has to make certain extra provisions because of expected credit loss. This extra provision which has to be made by the banking sector in India because of Ind AS would be around 1.1 lakh crore rupees. This is a huge burden which will be put on the banking sector. This was the prominent reason why the banks were asking RBI to postpone the implementation of Ind AS. So keeping in mind the demand of the banking sector as well as the requirement of amending Banking Regulation Act, RBI has postponed the implementation of Ind AS indefinitely. So basically, this is the concept of Ind AS. Thank you. Have a good day.